you all. We'll let people start to file in as we get it going. I am excited about today's call because we got on someone who I actually get to know IRL. And for a lot of you watching, that means in real life. Where he's a fellow Ashevillean here. Good guy, Matt Raker of Mountain BizWorks. Really excited to get to dig in with him about all the work that they've done over the years, and how their fund's operating now, so that you all can not only learn how to invest your money more locally and sustainably, but this call is really about creating a archive of the funds that are doing this work to really create examples and help people understand how they can set up their own funds in their own communities and how they can access the different means of capital in order to get that done. So we're really excited to get to dig in with Matt. I do want to give a shout out to our partner organizations and to our mini panel today. So first and foremost, I want to make sure that everyone is pointed towards the Main Street Journal. The Main Street Journal is really the place to go to understand local investing, so that you can put your money in your local communities rather than to big corporations or up to Wall Street in order to see it grow. Main Street Journal is really the place to go for all of that. So go check out and subscribe to the Main Street Journal. We are also, this archive is going up with Impact Alpha, where they are really on the impact side of the investing. So not necessarily local to you, but that are accomplishing impact goals. And they have really, if you want to understand how that works or you want specific information on specific things, that's really kind of the Main Street Journal of the impact side. We're also connected with Neighborhood Economics, who gathers those of us who are interested in these topics together, whether it's social entrepreneurs, whether it's impact investors, whether it's community builders and community leaders. Neighborhood Economics is really the place to come and learn from each other, make those connections you want to make in this world. They just did the Asheville one here, and they have another one coming up in Chicago, I believe, coming up soon. So go to Neighborhood Economics to get yourself registered for those conferences. And the Mindful Marketplace show, which is the show I have on Mountain BizWorks, or no, not Mountain BizWorks. They sound so, I've done that like 18 times, Matt. You have no idea how many times I've said
Bring it on
Biz
over,
Radio
Joel.
US or Mountain BizWorks. Everything is when it's both Mountain and Biz, it's a lot. So Biz Radio US Mindful Marketplace show. Go check that out as well if you're interested in these topics. All right, we'll get into it now. Oh, yes, last thing. I want to introduce our only panelist today, but he is, if we just have to have one, man, I think Michael, I think you're the one I'd put in. If I gotta put someone up one-on-one here. So Michael Schumann not only is the editor-in-chief of the Main Street Journal that I mentioned earlier, but he's also written the books on local investing. So if you are interested in that, check out. There's a bunch of them. Which the one I read first was Local Dollars, Local Cents. But Put Your Money Where Your Life is the one that's most recent and going to be up to date on things. So check those books out as well. So Michael, happy to have you, and Matt, you too, man. Thank you for joining us here. How have you been since I don't think I've talked to you since the storm. How is Mountain BizWorks, and how have you personally been since Helene came through here in the fall?
Yeah. Thanks, Joel. I don't know how I missed you at Neighborhood Economics here in town, but doing okay. Our family, we don't live too far from the river, but we were high enough up that we didn't have direct impacts from the water. Just some trees down, but they all thankfully fell, in the right direction, and we were just able to chainsaw our way out of the neighborhood. But the next day, but we've been okay, and feel lucky compared to so many others in our area.
Yeah, absolutely. So give us a little rundown first on Mountain BizWorks, how it came together and what you guys have been doing over the last, is it 20, 30 years now?
Yeah, 1989, so
Okay.
36 years
Yeah.
this year. So yeah, so Mountain BizWorks, we are a place-based fund that supports local entrepreneurs headquartered in Asheville, North Carolina, but we work in the whole mountains region of the state, which is 26 counties for us. So it's the whole kind of Appalachian Mountain, Blue Ridge Mountains part of the state. Really beautiful, really great area to work in. And the organization 36 years ago got started back when Asheville was really struggling. Which is, for folks that have visited recently, it's probably hard to imagine because it's such a vibrant, bustling community. But in the 80s and 70s, the downtown area was largely boarded up. And the city had gone through hard times. It was the most indebted city per capita in the country at one point, coming through the Great Depression, and then that was just a real hangover that, anyways, and then a number of other things that, that happened. So, but, beautiful buildings and great, community that I think was, already, innovative and creative. And so they're like, how can we really revitalize this mountain community and have a people first economy? So that was really that was the setting, you might say, of how it all started. And you kind of dig into what, how it came together.
Well, I guess you guys have, I mean, probably thousands, I would imagine, thousands of, when I think on that, it's probably thousands of small and creative businesses across the region that Mountain
Yep.
BizWorks has supported. I can't go to an entrepreneur event in town or you can't go out to dinner without walking around town without coming across Mountain BizWorks funded businesses. And CDFIs, for a long time have been on really the front lines of an inclusive economic development strategy. I guess in this moment or in Appalachia, what has been effective about y'all's approach in Western North Carolina that you think has led to you didn't fade out over a short period of time. This has been a long history of success in the region.
Yeah, it's a great question. And when when the organization started, it was really, inspired by the Grameen Bank, international microfinance movement, and like how can we get really small businesses, started, and then get a good community of local businesses supported. And Mountain BizWorks is actually kind of one of they raised a little seed capital from a group in North Carolina that funded 4 different micro lending kind of pilot programs all at the same time. And BizWorks is the only one that's still around today. The other ones didn't make it. So like you're saying, and actually the first loan that Mountain BizWorks made, the guy took the money and ran to Florida. And so never heard of from since. If I can dig up his name, I'll share it. Maybe someone knows it and we can find him. But apparently it was going to be a big hit bluegrass album, which never came to pass. But anyways, I think the Grameen Bank is all around creating these peer-to-peer, circles of entrepreneurs, and we've really modeled that and leaned, still do. It's a core to our DNA, this peer-to-peer entrepreneurial, approach. So like our foundations course, which is our kind of flagship business planning course, we do 20 of these a year. Each one is like 8 to 12 entrepreneurs. So about 200, young or aspiring entrepreneurs a year go through this program to work together to kind of figure out their business plan, their business model. And then if they're interested in funding, then they can come to us also to present for funding around that. But they're embedded from the beginning in this network of other supportive peers and whatnot. And then we try to just continue that. So we're not just investing in the individual ones, we're investing in the whole network, the whole ecosystem of entrepreneurs, just as much. And I think that's really worked out well for us. And we think, frankly, you're a small business owner. I've been a small business owner. It's just so much better to do it in a rich network, than to do it solo. So, I mean, that's just a huge part of what we value here.
Yeah, I love that. I guess, Michael, we can kind of go back and forth a little bit here, but I want to open it up. Now that we kind of got a little overview of Mountain BizWorks, I want to, toss it over to you here for a second.
Well, that's great history and nice to see you, Matt. One question I have is just if we take a snapshot of Mountain BizWorks today, how big is your asset base, and how do you divide that asset base in? As I look at your website, there's 3 different funds that are listed: High Gear, Catalyst Fund, and Electrify Fund. And maybe talk a little bit about those funds and how the resources are split up.
Yeah, great. Thanks, Michael. It's good to see you too. So we've got our core small business fund, which is kind of the main Mountain BizWorks fund, is around 30 million currently, and that's around 350 or so companies across Western North Carolina that are in that core fund. The Catalyst Fund is a early stage fund that we really designed to meet some of the barriers that some of our very low income founders and some of our entrepreneurs of color face around access to friends and family money early in the business life cycle, right, getting started. So we can talk about that. And then the Electrified Fund is brand new, just launched a couple weeks ago, which is climate focused. So really helping to meet. We just had tremendous interest from business owners across our region in doing more around renewable energy and energy efficiency, and great things like that. So that's what that fund is focused on. Those are both newer. And then there's not listed, but what is kind of interesting and become very relevant to us is around disaster recovery. And just in the last 6 months, we've done close to 48 million in financing, around 40 million in loans, and about 8 million in grants. So actually, it's interesting that portfolio is now even larger than our regular loan portfolio, which has been growing over 36 years.
If you added together though all those fund pieces, is the assets totaling about over $100 million, or is it under?
Not quite to 100 million. Yeah.
Okay.
Yeah, well, we're kind of 50 core assets, and then about another 40 million in disaster funds that we're administering, which really aren't on our balance sheet.
Right. And your funding has been, well, it sounds like the Electrify Fund is going to be moving into rather unique forms of finance, but historically the funds have been focused on the businesses and primarily early stage or startup businesses.
Really, businesses before they get to bankability. And so we do a lot of startups. About a third of our loans are startups. About 75% of our loans are what we call microloans, which are really loans up to 50,000, but they can be as low as 1,000. And then the rest larger than that. We can go up to 500,000 in loan size in-house. It used to be a lot smaller than that, but something we've seen in our region over the last decade, now 15 years, really, is just a real consolidation in banks, and we've lost a lot of our community banks. And so, it used to be that we could give someone a microloan or 2 microloans, and then they could go to the bank. But those banks aren't there anymore. So now we've had to kind of extend the runway so we can do some of these larger loans to really get folks to where they can be attractive or even eligible for a bank loan.
Right. So I'm curious, you mentioned that initially there were 4 grants that were given to do similar things around the state. Yours survived, the others didn't. And this happened probably before you were even on deck here. But just your sense of the history, what did you guys do right and the other 3 do wrong? Like, a lot of what we are exploring here is sort of the do's and don'ts, the lessons that have been learned.
Yeah, I think, here in the mountains, we're particularly hard-headed. And I think that we just didn't quit. The other one's probably, I don't know. No,
And you don't have an index to search for Florida,
That's right. That's right. I do think the having the culture from the beginning that's real entrepreneur focused and peer to peer, and then as the community at the same time really wanting to support local businesses. which was, and you don't get that in, you know, even in our region that we work across Western North Carolina. It's changed a lot now. It's pretty strong all across the region. But we used to be a real traditional manufacturing, furniture and textiles, heavy, and so there wasn't a lot of appetite or interest in new things. And if you started a business and it went out of business, that was kind of a mark against you, And so there was this real kind of cultural, hesitancy around trying something, risking something in small communities. But we've seen that change over time. That's taken some time to get there.
Yeah, well, I mean, I think that's interesting because again, knowing you, I mean, before you did this, you were very much about supporting local businesses in your prior position,
Hmm.
and it's you can see it on the website, and I know from people who are involved in it that it's very much about local businesses. Are there other ways when once you put people into your system with a loan, are there other ways that you market or support those businesses?
Yeah, this is really really important. We never make just a loan. I mean, that's pretty rare. It's always combined with what in the industry they call technical assistance. We call it coaching, business coaching, or our business classes. Um, and so yeah, we really want, again, just to have that supportive environment for the business owners to be successful, because most of our business owners, they're like experts in pottery, or farming or childcare or whatever. They've never managed a P&L. They don't have an MBA. So they've got gaps, and you know, so we kind of walk them through and help fill some of those gaps. And a big part of that is, we've got a great roster of other small business owners in the area that are just kind of willing to be soundboards or coaches or mentors, for folks to talk to. So they get real world kind of guidance, from folks, which is, really can't say how helpful that is, even for us when we're kind of looking at a new opportunity. Because I've gotten to learn a little bit more about restaurants, which are notoriously high risk kind of things, and but how do you do food costs, how do you do labor costs, how do you do marketing, and so having people in our roster that have successfully run restaurants, they can really help us analyze and help those entrepreneurs make smart decisions, and not make some of the same mistakes that the other folks did.
Yeah. I do want to call out, so as you folks were talking about, there was this neighborhood economics conference a few weeks back, and every night I had a chance to just experiment with restaurants there, and the food scene is extraordinary. So whatever you're doing there is really great, and I think it compares favorably to where I live, which is Palm Springs, California. We don't hold a candle with our finest restaurants to what you have, and how I'm curious if there are specific networks around the local food businesses that have helped to support them.
Yeah, there are. And this is real, I think, key for a vibrant local economy is for those local businesses to be well connected, and supporting each other and promoting each other. So I think it starts. There's a great group called the Appalachian Sustainable Agriculture Project, which is all around local foods promotion. Incredible organization. About as old as Mountain BizWorks, maybe not quite that old. Um, and they run a local foods brand, is one thing called Appalachian Grown, and they've got hundreds of small, family farms in that network all across the mountains. It's a really great organization. And then there's another group called, well, I guess there's two other ones. There's one called the Asheville Independent Restaurant Association, which is what it sounds like. It's a lot of our independent restaurants that got together, and they're like, we don't want Subway or Olive Garden, downtown. We want our own place, and so to work with our local farmers. You almost can't open a restaurant, in Asheville and not be connected with the Appalachian Grown, network of farms. So those are great. And then we've got a food products network as well, the Asheville Area Food Guild, which is all around food, value-added food products manufacturers that has come up as well. And so they each kind of work in their own areas, but are really important.
Right. And I'll tell you, I mean, it is such a transformation. I think your description of where Asheville was 40 years ago is accurate. And to see what it has become is an incredible story, an incredible inspiration. I've got a bunch more questions, but Joel, why don't we open it up for people and then
Yeah.
come back to me?
And I had one that I think will lead into one that we had from the audience here. And that was, so the last, I don't know, what has it been, Michael? 3 or 4 guests that we've had on have been co-op groups, and they've had a lot of access for people to, um, for non-accredited folks to become members. To, they had different mechanisms. But could you help differentiate a little bit on like funding and like where the funding comes from and how that's distributed and how that may differ from the co-op models that that we may have seen, kind of just so people understand that basic structure there.
Yeah. So our at the foundation of our fund is a local investors, and so so community investors, families, um, faith groups, businesses that have savings, you name it, that are interested in supporting their local economy and having some of their money go to work locally. So that's one of our great program that we've got. It's our most flexible, our most mission aligned capital. Then we are CDFI, so then we also kind of can layer in and access other forms of capital. So we've got a lot of bank partners that we work with, and we administer a couple of government programs, the SBA microloan program, a USDA microloan program, and some things like that. So it's kind of a mix of funding sources.
What does that mix look like? Like how much of that actually does end up coming from locally?
Yeah, it's about 20% probably on the local, and then probably 30% federal agency, and then the rest from banks and larger foundations. Yeah, so but early on the local was much larger. Like that was the main source, like getting started, and then as the organization grew, we started and we got a little bit big enough that we could then start to go to some of these larger institutional banks and so forth and raise money there.
Yeah. Yeah, you guys are kind of sitting at the intersection of like where the capital and the community are meeting. How do you think about, I mean, if someone were to look at that and kind of come at it from the angle of, well, even if you're having more non-extractive lending's still a problem, how do you think about that sort of tension within your guys' own work through that?
Yeah, I mean, we try to be we try to be affordable, right, on the capital, and so many of us are small business owners or former small business owners ourselves, and so like we get it, like just how access to affordable capital can be make or break for a business being able to get off the ground. And I think this we really love to think about what's the right cost, right? And how do we deliver access to funds in a way that's sustainable and that's at a level that kind of really meets what our local business community needs, right? And so, yeah, and we've got to have some margin in there to support our operations, right? And so if there's not enough margin, we're not going to be healthy enough to be able to reach enough businesses. So we try to find that balance, and we don't want to be too expensive as well, because I mean we're mission driven. That's our intent here. So we on our individual investor program, we pay up to 3% on that, which 5 years ago sounded great. Now it sounds okay. In terms of financial, if you like compared it against like what a CD might offer, something like that. So it's fixed interest, fixed term. It can be as low as one year. It can go up to 7 years, and then it kind of steps up from there, and as low as $1,000. In terms of an investment, and it can go higher. But I mean that's really important. And then we charge around anywhere between 7 and 9%. So you're kind of averaging around 8% on the loans. And so everything in between has to cover our operations. If we have loans that don't get repaid, fortunately, about 98% do get repaid, but the ones that don't, we've got to cover that. And so so we always kind of, we're really proud that over the last 3 years, our average loan interest rate has actually gone down each year. So even while Fed rates and everything have been going up, inflation's been going up, we're like, maybe we can be the one thing in town that goes stays flat or even goes down a little bit.
Yeah, and that's with all of the shifting and possibility and changes in funding and in what gets appropriated where. I guess what do you think is the most underappreciated role that Mountain BizWorks and other groups like Mountain BizWorks can play in this environment?
Well, I mean, you know, we're we're in a country where you can't go to a bank and get money for a startup or really any company with less than 2 years of profitability. So if we want vibrant small businesses, we've got to have entities that you can help provide those resources, because not everyone's going to have a rich uncle. So I think CDFIs and things like CDFIs are provide such an important role, and it's really underappreciated. Um, you know, our name is CDFI is like it's not memorable, and so that doesn't help us necessarily. And we just kind of, I think, do good work in the places where we are. A lot of people here know Mountain BizWorks. They don't know that we're a CDFI necessarily. But yeah, I think so I do think that nationally, CDFI and other community lenders play a really vital role, and we do need to kind of recognize that and continue to support them.
Yeah, absolutely. Could not agree more. Are there any anything on the horizon or anything on the like kind of future that you would like to that you're excited about that you guys are working on, or any kind of advice maybe that you would give to people that are out there looking to kind of start something on their own, whether that's like we've talked a lot about the community, the CDIFs, not CDFIs, the community diversified investment funds, things
Yep.
along those nature. A lot of the folks in this room are looking to try to create something like that in their own local communities. And so you've gotten a lot of experience with kind of seeing the back end of a lot of how that needs to work.
Yeah, I get excited, anytime people come together and pool the money locally to do, important projects locally. Like in Michael's books, he's got, great examples of all these different structures, and I get excited about all those. And I think they all fit, different things. So CDIFs, CDFIs, micro loan pools, slow money, you name it. All really important. So investment crowdfunding, we've seen that, kind of emerge and become more relevant and more used. We're kind of we work with several projects in that area. Yeah, I think I think we're really demonstrating too. We as at Mountain BizWorks, I think we've had our investor program for almost 20 years now. And it's had perfect performance. We've never missed a payment, for any of our investors, and all the other CDFIs that I know that have similar programs, they're also like that. So I think we've just shown that this approach really works. And we get to have great restaurants and have great local services, and even companies that start as local companies but then become big national, company, not huge, but 100 people, 200 people type firms, but like real anchor employers in our communities.
Yeah. And I see that peer-to-peer thing. Like it's a real thing. You'll be out and you'll meet people who know each other because they were in groups together. that they actually got that and like just seeing how much you guys are involved in the community, I think is part of why it's been so successful because it's out here everywhere. And I wanted to also point back to that. You said you have a 98% repayment rate.
Yeah.
Is there anything else aside from that peer-to-peer network that you feel really contributes to that high success rate?
I mean, we try to have a really strong and open relationship, with all of our um, founders that we work with, and I think they, we really do want to partner with them on their success, and so, and because we're small business specialized, um, we know that there's going to be bumps along the way, and so we're set up to be flexible, and to work with folks through the ups and the downs, because we'll be patient, and so I think that's important, of doing that, and there's times where we say not yet, or sometimes it's just not a fit, but we try to say not yet, wherever we can, because there's so many businesses, like, this never shows up in like the stats, for the businesses we helped not start, but there's so many that come back to us, after we've said, it's not ready yet, or we're not comfortable with it yet, and they're like, thank you, I was about to cash out my retirement, whatever, and now I know that, that I've seen this a little bit more, that you were totally right, you saved my marriage, whatever. So there's real repercussions. The business is not working out, so we try to put people in the best position we can.
Yeah, I love it. I know we had an audience question earlier about Lonnie. You said you were starting a place called Placemakers Neighborhood Network.
Yeah, you've kind of asked the question for me, Joel. Thanks. Mostly, it is for people who want to make change to the physical environment, the buildings, whether it's adding a unit or doing something where they see a decrepit old building in Portland, Oregon, here where we live. It's for people who want to have a hand in improving and uplifting their own particular neighborhood. It's kind of like a swarm of little local infill developers. And we're collecting kind of very hyper local trainers so that people understand what it's like, not just in a code book, but how it works in the field in real life. And so I'm very interested in, well, I know that the feds are playing the game with your fund, the federal level of the CDFI fund. So I was asking, how do you diversify? But you kind of answered that question. So thanks so much.
Yeah. Yeah. I would not start federal first, at the
No,
moment.
not these days.
Yeah. Yeah. And I think hopefully federal funding will stay there, and it's got a great track record. But yeah, I
Matt,
think having local first, and then go from there.
exactly. How did you
Yeah.
reach out? How did you kickstart 40 years ago, before Asheville is what Asheville is now?
Yeah.
How did you get the local to raise an eyebrow and say, ooh, yeah, what did you do?
Yeah, well, so from the stories that I've been told about it, you've got to have a couple sparks,
Yep.
And so there were some of those, one was kind of more of a civic activist that just really saw potential for this boarded up downtown to be revitalized. One was an economist that had just done Peace Corps, and was involved with Grameen Bank and was at a great local institution called Warren Wilson College, which is a really neat school right outside of Asheville, who was the original fiscal agent for the organization. And then there were a couple folks that wanted to start businesses downtown, but they didn't want to do it so by themselves. They were like, if I'm the only person downtown, no one's going to come to my business, and so they kind of all got together and pulled together and put out this call and said, hey, we're going to raise a little money. And it was not very much money. I mean, the loans were back then were, I think, $2,500, I think, was like the max loan you could get. And so, but they pulled enough, and they said, passed some flyers around and told their friends, we're gonna get our first cohort together, and it was like over the weekend, it was fully booked, and so then, and they're like, okay, there's something here. And then it just kind of really I mean, they had the
Oh,
hiccup
well,
of the first guy taking the money and going, but they then started doing some more due diligence right after that.
thank you. Thank
Yeah.
you. Yeah.
Joel, you're muted. There we go.
Thank you. Yeah, we had another question come in from Sarah. Sarah, would you like to unmute? If I'll give you a few seconds to do so. If not, I'll ask it for you.
Yeah, thank you so much. My name is Sarah, and I'm with Bridging Virginia. We're a small CDFI in Virginia, of course. And I'm interested in what types of post-financing technical assistance have you found to be the most valuable for your clients?
Yeah, great question. It is a mix. We do one-on-one business coaching. And that's particularly helpful because folks get very individualized support from existing small business owners that we try to match make as much as we can relevant to their sector or whatnot, or where their particular needs are, finance or marketing. So that's really helpful. And again, we leverage other small business owners to be our talent pool for that. And we've had great success with that. And typically small business owners, once they get to a certain level of success, are just thrilled to be able to give back and help others kind of come along because they probably had help, along the way. So that's great. And then we also have some, one other one is we have a small business financials course that it's not mandatory, but almost everyone needs it, and because that's a real gap for a lot of folks if they've just not run a business before. So we really encourage folks to go through that. Really, a lot of folks end up working, with bookkeepers or accountants, which they probably need to do anyway, but at least now they know how to talk to them and know how to kind of read some of the data they get back and some of that kind of stuff.
Thank you so much.
Yeah, great question, Sarah. Also, I'll throw it to John here.
Hey, John Abrams. I just noticed that my name on there just said John. So I did change it. There's more to it than that. I wanted to ask Matt, do you have much intersection with the industrial commons down the road?
Yeah, yeah, we know them well. We're a great group. So the industrial commons is
Truly amazing.
truly awesome folks. Yeah, we know Molly and Sarah and the crew there. And we collaborate with them mostly on, we're working together, like small business ownership transitions are a big deal, everywhere, but particularly in West North Carolina, our average business owner is kind of aging up where they're going to be thinking about transitioning at some point. And so we're working with them on, here are the different ways to maintain that ownership locally, whether it's to your employees, or just to find other local small business owners. So yeah, great folks.
And do you work with the companies that you work with? Are there transitions going on to worker co-ops?
We've had a couple.
Yeah, great.
Yep. We'd like to see more. And it's a hard process, it takes time, I guess, right? Because there's a big cultural part in, of getting everyone on board to do a worker transition. So if you don't have the culture in place, it's not as easy as the owner saying, "Oh, that's a nice idea. Let's sell to my employees." You got to do some work to really prepare for that.
It's really true. It's true, but I find that transitioning a business is hard no matter which way you do it. And and the ownership transitions to a worker co-op are much more transactional than actual leadership transitions, which need a long runway. So I'm seeing a lot of them happen with an early ownership transition in mid-career and then moving to leadership transition later on.
Well, we'd love to see more kind of case examples, I think, to help point folks to of where that's happening. We also see
that is funny. I just wrote a book about that. And,
okay. Teeing you up here.
And it comes out on June 3rd.
Perfect.
I'll put it in the chat.
All right, there we go. Yeah. Please do. That'd be great because yeah, it's folks don't know enough about it, and folks don't know enough about how CDFIs or other financing tools can also help facilitate part of the transition as well.
We've had a few other really good ones come in, so we'll get to as many as we've got time to. Matt, I don't know if you got a hard out. We can go until 3 if we need to.
Yeah, I'm good. 3.
So Thomas, if you want to unmute, I'd love to hear you on here.
Yes, thank you. Good to see you, Michael. My question relates to equity funding. Do you provide any sort of equity funding, and to what extent is that part of your business?
Great question. A lot of the loans we make, people look at it and they say that you should be taking equity with the level of risk you're taking. But that we don't. We just do kind of flexible small business loans. So, but equity is really important to have in the ecosystem. It's just not we don't do that directly.
Is there anyone who is doing that?
Yes. Yeah, there is. In our network, it's taken time to grow up that capacity, but we've got a few different groups that are doing it in a structured kind of formal way here in the community, and then we've got partners on the with the group that really specializes in investment crowdfunding, which can do equity and some others as well.
Do you have a specific organization in your area that's doing that?
Yeah. One that we've worked with a bunch is called the High Country Impact Fund. And then there's a new one that's just started called Impact WNC Fund. I don't know why they went that name so similar, but they did. So yeah, two groups of both of those are largely started by other local small business owners that have pulled together funds to help invest in other up and coming companies.
Is there anyone who's advising small businesses on pre-sale funding?
That's a good question. We haven't worked as much in that, but Michael, you'd probably know some folks in that world.
Well, I'm not going to remember the names offhand, but there definitely are some organizations out there, companies that are focused, specializing in pre-selling. Actually, if you put your latest email in, I will look that up and send it to you.
Okay, thank you.
It's a great strategy for kind of community-focused companies.
All right, and now Austin Higgins had a good one about back on the ownership transitions. Austin, if you'd like, I'd go ahead and ask your question.
Yeah, absolutely. Hey, Matt.
Yes.
I actually worked in Nashville, in the Asheville market when you guys announced the Market Advisors program. And I was kind of doing the same kind of thing, commission only basis. So can't recommend that. But I was curious, a couple years out, how has that program been received? Are you seeing a lot of good activity? And in terms of local investment, what kind of role do you see those programs playing, or what kind of opportunities do you see them providing moving forward?
Yeah, so Market Advisors, thanks, Austin. It's good to see you. Is our ownership practice. And we started, looking at the kind of the small business ownership crisis, the silver tsunami, that we're facing in the region. And frankly, we had a number of our clients now that we're like 36 years old that were kind of came back to us and they're like, we'd really love to transition this thing. And in a lot of parts of our region, very rural Western North Carolina, there aren't that many commercial brokers in particular, that can make it work, with valuations like sub 500,000, it can get challenging to get someone's attention. And so we formed Market Advisors to be kind of a nonprofit way to kind of have that social enterprise, have that capability across Western North Carolina. working a lot with the industrial commons, as we talked about, as well. But we've been learning a lot. We've probably helped transition, I don't know, close to 10 companies now, which we're really thrilled about. You know, it's not a huge number, but it's been a huge amount of learning, which was kind of what we've been first really wanting to do, is like figure out how to do these well. And we've worked both on the buyer side and on the seller side, some as well. So we're really going to continue to lean into that area. And yeah, thanks for asking. But and we're still learning a lot, but I think that's really going to develop into something very, very nice. Yeah, and hopefully something that'll be self-sufficient. We're not quite there yet, but that's the goal.
Awesome. Appreciate the update.
Yeah. And you had another. What was the second part of your question?
Oh, just if you saw, you know, an opportunity for investors with more of a local focus in those kinds of, you know, silver tsunami type transitions, whether it be employee ownership or some other vehicle.
Yeah, that's a great question. I do think there's a ton of need in that space. There was a group, they're not local, but they were down at the Neighborhood Economics Conference, you know, New Majority Capital, right? They're out of the kind of Boston area, but working nationally to help folks with their kind of patient funders for the kind of owner investment that you've got to be able to, you know, typically it's 20%. You know, if you want to get a SBA supported loan, you need to put 20% down on the purchase price. There's ways you can adjust that, but so they're helping with that, you know, that kind of equity requirement there. And there's a lot of cases where you might want to have more equity and less, you know, debt. So I think there's a lot of need there, and for a lot of companies to be able to help make that transition possible. So yeah, good thought.
Awesome.
Thanks, Austin. And then Wendell, I loved your question here. I'd love to let you ask it if you'd like.
Thank you. Yeah, a number of years ago, I coordinated a business training class, a series of classes in Elkhart, Indiana here, RV capital of the world, but a lot of aspiring micro entrepreneurs, very entrepreneurial culture, innovative culture. We used a template. It was set up by Mennonite Economic Development Associates, MEDA. And it's a pretty basic template going through legal issues, marketing, accounting, and all that, and evening classes for people that had day jobs and so on. We considered it a success. If some people bowed out before it finished, realizing what it all entailed, and you spoke to that already. But I noticed part A, and my question is the training series. I think it was we did 3 rounds per year. After a while, that seemed a bit cumbersome. We did 2 rounds after a while, but was really vital. And I didn't get in on the first part, you might have already spoken to this, but whether you incorporate a series like that in the mix of getting small businesses off the ground in your program. And yeah. Secondly, it always struck me that in the legal issues class, we talked about LLCs and S Corps and partnerships and so on, but nothing on cooperatives. And I thought, well, there would be a real place to revamp one of those training series that would include discussions about cooperatives, pros and cons, and also the triple bottom line, and come at it with sort of like a perspective, Main Street Journal kind of perspective.
Yeah, I love that. We do have a course called Foundations, which is our kind of business viability, business planning course. 6 sessions. Ours is 6 sessions long, 3 hours each session, so kind of 18 hours all in. And like 8 to 12 entrepreneurs go through that. We'll do some during the day, some at night. Like you said, we just found that having a mix of options really helps with accessibility. mostly in person, but we do a few a year virtually as well, just again to have more accessibility there. And yeah, I think that's and you know, I know some other funds that's kind of what they start with, that with just the training program first, and then they add the lending kind of as a second thing, and that makes a lot of sense to me. Mountain BizWorks kind of did all at the same time, which works too. But I think it's really important to have those, and those cohort programs are so powerful. We've got a couple follow-on ones that we do later too. Like once you're in business, we've got one, and then if you're in a growth stage, we've got one for that, and some other things. I don't think ours has cooperatives in the mix early on. I mean, we just mentioned it, but we need to. You know, I think it's a great point that introducing those concepts early is super important, just to give folks the option that those things exist. You know, because they may not see them every day.
Mm-hmm. Yeah.
Thank you.
Yeah. Yeah. And I love that too, because most business owners, I think, who are starting a local business, have some kind of feeling of they want it to be for the community. They have a sense of purpose around it. And there's a lot of talk about, having, fulfilling that purpose in your business and in starting your business. But there's not a lot of talk about it around in exiting your business, because if you want it to be a staple in the community, you can't run it forever. And so just kind of understanding that, even as a way to transition out from the beginning, I think would kind of really be an ideal way for people to be able to start something original, but then kind of leave it to the people who helped them build it, Yeah. All right. Well, we are coming up on time. But man, I think we could keep going for a long time here, Matt. I really do. I really appreciate your time today. I really appreciate the work you've done. I really appreciate just kind of on a personal level how much I've seen you invest into this community, and how much it's impacted like a lot of the day-to-day lives of the people here. And so we're really grateful for you and grateful for your time today. And I think a lot of us learned a lot here. So really, really glad to have you. Remember, you can check out this recording as well as all of the back recordings of everyone else we've talked to on the Main Street Journal. It's also in progress of getting put up on Impact Alpha. Yeah, make sure to listen to all those back ones and tune in every other week. We are in here with a different fund, making a different impact in a different community, and teaching you how you can do the same. So great to have you all. Thanks for your time. And until next time, remember, we are each other.